You don't want to miss this. I think the banks are trying to cripple crypto with another game. Stay tuned.
Trade Genius.
Hey Phil, I think you know more about this topic than I did, but I was seeing a lot of FUD flying around on the interwebs this weekend, and I know we're hitting certain levels on crypto. And could you kind of explain this to me and to our audience, because I don't think people know how to separate fact from fiction, and are we on the front end of something more sinister here?
Yeah, we'll bring up the article that has been floating around Twitter and clarify it, and then we'll look at the chart on Bitcoin, which we haven't done in a while because I think we're at an important point as far as where price action is. So diving into this article here, basically, Bloomberg came out with an article that said that essentially this Signature Bank, which Binance does a ton of business with, was going to limit transactions to those who only deal with transfers of $100,000 or more. So if you're dealing with money through Signature Bank, that essentially eliminates 99% of your retail customers. Now, it doesn't mean that every bank is going to do this, but I think it's setting a precedent. So when this article first came out, it was misunderstood that the SWIFT network, which is how all the banks transfer, if the SWIFT network had implemented that rule, that would have been a significant blow to Binance as far as its revenues. So what does that mean? Well, what would happen if all the banks started to enact this rule? Because essentially, if you have to do at least $100,000 in a transfer, I mean, that's most everyone isn't going to be able to do that, right? 99% of retail's out. In fact, I would say probably most of retail's out because not too many retail customers are doing six-figure wires. But what I think could happen is you'll see more stablecoin usage. So it's not that people would be stranded per se, but they'd have to then convert to stables and then take those stables and find a way to move them to somewhere locally in their country that can convert those stables to dollars, right? So, and will that be an option? Who knows? Maybe there'll be a bunch of people stuck in stables depending on their country, right? So I think it's a trend that's going to continue. My theory on that is that the banks are probably getting a tap on the shoulder because the Fed's still trying to get the asset prices down on everything, right? They want the speculation out of the system, and this may be through a chain of command. One way to do that, and that is to just cut off funding and the speculation for these, what they consider fringe assets, right? These are risk on assets that are in the outer bands of risk, right? The most speculative part of the whole regime. So they may be trying to do that through this mechanism. And that was my theory. What's your theory on that?
Yeah, I mean, to me, I think it's a harbinger, and that's why I got a little nervous because, at the end of the day, I think the Fed and central banks around the world are going to try to start ring fencing their economies. And what I mean by ring fencing is that they're going to make everybody live within the bubble of their currency, so they can jack inflation, so that they can nominally pay for the debts that they're creating. And so this is one way in which they're going to start moving those pieces around to making sure that your capital can't leave your currency or your country. And I know cryptocurrencies by its nature is outside of all the currencies. So they said, well, if I can't do that, I'll just do one step better, and I'll start ring fencing with and how you can move things. So I just want people to be aware of it. They have to do things very, very, very tenderly because they also don't want to create runs on certain currencies and certain banks here. But I'm nervous and I'm watching.
Yeah. So I think the next thing we're going to do is jump over to the chart of Bitcoin and kind of show you guys, what we're dealing with here, because how these cycles go. Just it seems so perfectly timed that we're going to get a bunch of FUD probably as things start to roll over. So be prepared for more FUD. And we can also look at the chart to just kind of see that, hey, we're at a spot where we may have to look at, if you've been riding this move up, you may want to be careful here. So let's dive into the chart. Okay, Bob. So, one thing, the range trader, which is this indicator that gives us this green and this red shading, it's a staple of how me and Bob trade because it just takes a lot of the work out of, support areas for us at a glance. And for this entire run up, right? Since we bottomed and run up, the 1 hour range trader buy zone has essentially held support for all the pullbacks. It flipped briefly here, but essentially that zone held and then came back up, flipped back to green, and now we're back testing it here. Now we are seeing warning signs that this move is getting a little toppy. You can see here, basic kind of head and shoulders pattern there on the hourly. So you got to watch this now for further breakdown. Futures are going to open here in a little bit. So we'll see how, by the time you guys see this may have moved down. But, on the daily is what I wanted to show you guys, is that on our heat indicator, when we get a lot of these bars coming in, especially on the daily and especially on the lower pane, when these all start to coordinate, we definitely take notice, and that's a warning sign. So I wouldn't really want to be getting long unless this area started to flip to support. So, consider, guys, on the whole crypto space, a lot of things are up 20, 30, 40%. And, that's a gift right now, considering where we're headed, in this market. Things are going lower. They're trying to take liquidity out of the system. So, and I see a lot of euphoria right now in crypto Twitter. So, be careful here, because we could easily see a pullback as we get started going into this week. Now, bigger picture, could we run up into the Fed's announcement on February 1st for the rate announcement? It's possible. It's also possible that we could go down into that announcement. So you kind of want to see, like, what's the bigger money, what's the positioning. But if there's a trend that's starting to develop either way, you kind of look for that to carry through to that date. So it'll be interesting to see what happens here. But we are seeing definite, warning signs on our technical indicators that this move could be nearing exhaustion, if not already put in the high. You'll notice that daily candle there has a bit of a bearish look to it with kind of a spinning top there. So, Bob, what were your thoughts on kind of this move so far since the beginning of the year?
Yeah. So, well, it's the move is too far too fast to be sustainable unless we're breaking into a new bull market. And we discussed why we don't think any of these assets are in new bull markets right now. So I think it was beyond a short covering rally. I truly believe that this is more like the Fed's going to pivot kind of rally, because, gold, silver, and the miners, all of those energy, all of those pushed higher too. It's just that Bitcoin is kind of like Paul Revere. It gets out there first and sends out the warnings. And now it's sending out a warning to sell. We take that indicator at the bottom. That's one of our algorithms. Phil's exposing the detail to you guys, but this is one of our algorithms that we rely on incredibly. And, I think the hardest part of trading, and we joke about it, is that I can get you in any trade really well. The hard part is getting out of the trade. And this is one of the tools that we develop to basically wave the white flag. The range trader will tell you whether you're wrong, it breaks back below support, or that it's glided up enough and you should get out. But our heat indicator will also tell you that, look, you're way overbought here. And one of the nice things about trading is that you don't have to catch the bottom, you don't have to catch the top. You can get rich by trading the middle 60. And this is telling you the trade is good enough. And so these are the two indicators that Phil and I use religiously when we trade. One helps us set the levels, or we buying the dip, selling the rip, and the other one tells us whether or not we're positioned to have a high probability move, high probability move for profit into a move here. So yeah, Phil, and here's the other thing too. If you don't mind me just jabbering it for another second, is that Bitcoin to me is, like I said, is Paul Revere. It's a canary in the coal mine. And this is warning me that if Bitcoin starts to roll over, then we should be positioning ourselves for some weakness coming, because, for me, Bitcoin is still the purest trading asset, has the least amount of friction, in either direction. So those are my views on it. And so that's why we've been watching this move with Bitcoin with a little bit of glee and a little bit of astonishment. Now we're starting to see the FUD news coming out to give people an excuse to maybe bail on this trade going into the Fed meeting. CPI report, strengthening dollar, and then we may get our pullback that we've been waiting for to set a better base, I think, for Bitcoin into the future.
Totally agree. All right, guys. Well, that's going to do it for this episode. We hope that you found that helpful. What are your thoughts? Do you think Bitcoin's going to go higher from here? Or do you think that's enough and we're going to head back down? Love to hear your thoughts on that matter. And as always, appreciate your views. Please hit like and subscribe. It really, really helps us out, and we appreciate it when you do that. We'll see you on the next episode. Take care.
Trade Genius.